Gambler's fallacy is the bias that we're going to talk about today. So, what is gambler's fallacy? It is a belief that a random event is less or more likely to happen based on results from previous series of events. So just for example, let's say you're doing a coin toss, and the first toss is heads, the second toss is also heads, third toss is also head, the fourth toss is also head. Now you're saying, the fifth toss has to be tails, because in your mind you are thinking there was 50% probability of heads and tails. So four times I've not hit a tail, so the probability of tails is very very high. And there cannot be a reason why heads should come again. That's what usually we would think. This is basically the gambler's fallacy, where we are trying to gamble our thoughts into a system where we are saying that the previous uh, outcomes of the toss have something to do with the next outcome of the toss. So each toss is independent. The coin, of course, does not remember what it showed the previous time. So even after four heads, the chance of heads or tails on the next toss remains 50-50. Although in our mind it becomes like 90-10. So it is not less likely just because heads came up before that we will get uh, another heads. Another example could be the roulette game. If you've been to the casino, you'll know this. So you're at the casino, you're watching the roulette wheel, and the last six spins have all landed on red. Now someone is saying that it has been red so many times that black has to come the next. So I'm betting everything on black. And of course, again, it may or may not happen. So in the markets also, there are a lot of such gamblers' fallacy assumptions. For instance, a stock has already fallen 80%. It can't fall anymore. So that would be a thought process in your mind that, I've seen it fall 20, 30, 40, 60, 70, 80. Now it has to go up. So, for example, in this case, we have taken example of Vodafone Idea, and the stock is dropping from 100 rupees in 2015 down to, maybe 12 rupees by 2019-20. It is down 90% from the highs. And you're saying, how much more can it drop? It can't drop anymore. It has dropped so much. It is time for recovery. Let us enter. And we can make 4 5x on this. कहाँ जाएगा मतलब that's the usual refrain in the markets when the stocks drops below. People say अब कहाँ जाएगा. And then from there also, there was a 75% drop in just the next maybe like 4 months. And till date, 5 years hence, it is not yet at that price where it had initially dropped 90%. So this is gambler's fallacy, where you're trying to gamble your way into that stock that the trend has to change. Another one could be, streaks of gains. So stock has gone up for 5 straight weeks, so it should fall now. Let's say Tanla platform, 2020, it went up like a rising like a phoenix. 7 consecutive positive weeks, 121% up in 7 weeks. It has to correct now. That is the usual frame of mind. I can't buy it now. It will correct. It will come back to maybe 83, take support here. All those kind of stories we concoct in our mind. What happened? It didn't stop at all. It just kept going up. It went up 13x from that point. So imagine you were at 135 rupees, and somebody perhaps very knowledgeable about that industry told you that Tanla is going to do well. Now you want to buy Tanla, but you are also seeing that it has gone up from 36 to 136 in the last 6 months, and it has never done that in the last 10 years. And hence, our mind, the gambler's fallacy comes in that no, this will correct, and then I will buy it. But it doesn't stop, doesn't correct from there. It goes 13x from there. So stocks in strong momentum can rise beyond our expectations, and no guarantees are there that it will fall. If it falls, we'll exit, but no guarantees are there, right? So same thing happens in IPO also. That you bought an IPO, it falls very sharply on the listing day. So to convince your own self, you say, no, it will bounce back tomorrow. Today was basically panic selling by retailers who are flipping. Tomorrow institutions will come and buy this. So it may be like LIC IPO opened May 2022. It was one of the biggest IPOs in the history of India, but it opened below its issue price, kept falling for like 3, 4, 5 weeks. And a lot of folks were saying it has already fallen so much, from 1,000 rupees down to 600 odd since listing. It's a great company, so on, so on, blah blah blah. Backed by government, it has to bounce back. It has to bounce back. What happened? It is still around that same level, even after a few years, and it actually went down to further to nearly 500 rupees post that. So this concoction of ideas that we get in our minds, that so far this has happened and hence it should change now, that comes from our own story making. The stock is not telling you at this point that it's going to go up. The stock here is not telling you that it is going to go down. The stock is telling you that it's going to go up, but you don't want to believe it. You're saying, no, no, it has gone up too much, it has to come down. But the stock is saying, oh, no, I'm going up. So, usually in the markets, the stocks are telling you a story. You are not willing to believe that story. The stock is saying, please come and buy me, but you are saying, no, no, I am more intelligent. I don't want to buy you right now. So that is where most of the distress will come. And even perhaps in sector rotation, like recently, public sector enterprise stocks had performed well post COVID. Yeah, so from 2020, PSC index came from 2000 to 4,300, doubled in like 2, 3 years. And what a dull sector it has been for decades. Last decade has been nothing for public sector enterprise. So where will it go? It has to come down only. But in the next 2 years, it goes from 4,000 to 12,000. 164% return in 1.5 years. So your thought process that no, no, this will come down has been completely ambushed here by the trend which was up, and we created a story in our mind that no, this has to reverse. So these are the kind of you know biases that lead to poor decision making, deep losses, loss of opportunities, as capital remains stuck in weak non-performing stocks. Why? Because we are ignoring stocks that are telling us a story. We are wanting to create our own story, and that's where we get stuck most of the time. So non-discretionary momentum strategy avoids all these traps. So when you're not creating your own story, more than half of the battle is won. You are following trends, you're following Bhava Bhagwan che, you're following predefined rules. Sometimes you will win, sometimes you will lose, but overall as a package you will win. No emotional ties, no assumptions right there. So instead of guessing reversals, or it can't go down any further, uh, or waiting for objective price confirmation, it ensures that investments are made only in stocks which are actually showing real performance, real momentum. Stocks that are actually moving up, you should be placed in those stocks, not in any hope stock that maybe this will go up. No. Let me know in the comments how, if you have been a victim to gambler's fallacy. I'm sure all of us have our stories for this, and it'll be great to read your comments. Do like and share these videos, and do subscribe to the channel. Thank you.